Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn and Associates with your metals market update for this, and we are Monday, the 9th of April, 2018, but I'm thinking to myself, we're already at 5:52 at night. We're already trading on Tuesday's session. So for Tuesday, and that's what I've got behind me, we had a crazy day in the office. I internally moved my whole office to another office within our office. We've got nice offices, and I decided summer's coming, I want a different office. And here we go. We've got the market down 90 cents. Silver market's back down a little bit, copper down. Now, one of the events today that obviously traders are concerned about is the raid on Mr. Cohen, that's President Trump's private attorney. The FBI raided that. Second thing we're all looking at is what does the president mean when he's talking about he's holding possibly Iran, Russia, Syria accountable, and the U.S. is going to take a measure within the next 24 to 48 hours. What does that mean? No, none of us know. The one thing this president said he would not do when he was campaigning is tell those adversaries of ours what he's going to do. I was surprised that he said that he'll let everybody know in 24 to 48 hours. Normally he just does it. So that was sort of a break with his own brinksmanship. We'll see what goes on there. Now we're looking at the energy markets. They don't appear overly worried that we're going to see another Mideast conflict. Don't quite know what it is. I, for one, would expect that if the U.S. does anything, it might be with cruise missiles. I don't think we'd put our own soldiers or pilots in harm's way, but you just don't know. You got to wait and see. What bothers me is with that threat, the gold was up $4 or $5 today, but it's giving that up right now, and it appears that the metals and currencies just don't want to take a stand on anything. When we look at the weekly chart of gold, the one thing that stands out is the market has stayed over the 18-week moving average of closes, which comes in now at 1322.70. The next thing I look at is the daily area chart to see just where that's at in relation, and 1335.20 is that number. Now, the market had a pattern of a down thrust. I think tomorrow will determine if it stays in place or if the market is ready to say, nah, it's ready to move out to the upside and have an up thrust. I'm always bothered when you get a strong Monday in prices because often it leads to a weaker Tuesday. It doesn't have to, but it's a phenomena that I keep an eye on. More important to me is take off the name of the chart. Look at this pattern. Is there anything to do in that pattern becomes the first question. I have my doubts about it. When I look at the chart pattern, I've got a lower low and clearly a higher high. That is not the definition of a trend. An uptrend would have higher highs, higher lows, a downtrend, lower highs, lower lows. What I frankly see is when I look at this 18-day average, I see the market just spinning its wheels against it. When it breaks down, it finds good support at the 100-day average of closes, and so far it's been unable to even get up and stay above an upper Bollinger Band. It reached up for one 2 weeks ago, got up here into the 1360 level, and as fast as it went up, it lost nearly all that value that it came from down here, getting back into the 1320s. So what I wrote in my gold report a week ago was I think this market is spinning its wheels right now. I have not changed my opinion. I'm not seeing yet a breakout one way or the other. And momentum, which I think often leads price, well, if it can get any flatter than it's going, I don't know how it can. It's basically both numbers hanging at 50, which is exact neutrality. So I don't know. In the gold ETF, we do have a pattern of lower highs and lower lows, but the market is staying over the 18-day moving average of closes. The two negate each other. When you've got a downtrend at work on the swing line, but prices are staying over the 18-day average, which gives the market upside bias, you don't allow that downtrend to grab hold. Then I look at the momentum, which just like in the futures is stuck. So let's see if we can get an edge in GDX, and I can't. I have a pattern of a lower low, now a higher high. If we take a look, today's high was 22.19. Do you see this right here? The prior high was 22.18. You had an outside day down. Outside day means you took out the previous day's high and low and closed lower on the day. To capture the bears, if today's high is taken out either tomorrow, which is basically Tuesday's trade, or Wednesday, then I would look for the market to get back up and challenge the 22.44 to 50. If that doesn't occur, I'm just looking for this market to lay down in this general area of 21.83 until the next event happens. Now, the gold-silver ratio is backing off a little bit. Okay, it's right now at 81.32, not telling us a story. The trend in silver, like gold, is one of lower highs here and lower lows, unlike all the gold components, but staying over the 18-day average of closes. And again, momentum flat. Nobody's making a move here. And I want you to just look at the general picture. Take off the name silver. Look at how sideways this is going. If this is a base in the market, I'm going to be looking at rather high prices because it's gone sideways for so long. If it's a top in the market and the market starts breaking down, you could be talking the $15 area. In the copper market, to my surprise, the market's acting better. To no surprise, and I'm balancing this, I didn't hear anything negative over China during the weekend. Therefore, not a comment from them to retaliate with President Trump saying $100 billion is being considered was a good thing, and the market liked what it saw. So it's in an uptrend, higher highs, higher lows. You see that. But it's overbought as can be. I would be very surprised if we don't return and challenge that 18-day average. Let's assume I'm totally wrong. Doesn't challenge it. Well, then your resistance points are 315, the 100-day average of closes, and the upper Bollinger Band, which is dropping tonight to 312.75. The market that has come out of its downtrend, in my opinion, is the platinum market. Look at how the market slipped back up. Now, what led this? If we take a look at Friday's close, you still had your embedded reading. You had a reversal where you got back over the upper Bollinger Band. There was really no signal it was going anywhere. It gave the signal last night when it reopened on Sunday night, and the market lost the embedded reading. When that happens, it is typical for price in the 18-day average to run for each other and often hit. So you're losing it here. Now, you haven't hit it yet, but I'm still looking for that to happen. I think this was a get-me-out-of-short move in the market. Same thing is happening, by the way, in the palladium market. And I cannot say it's because of the dollar. If you look at the dollar and the euro currency, they're both, just like silver, spinning their wheels, going sideways, going absolutely nowhere. Momentum is turned down. Today's break low took out a previous low, and this market, the whole rally stopped at what number? You look at the upper Bollinger Band. That's where I would have thought the pros are coming out. Market overbought, and you pull right back to that 18-day average, that line in the sand. And from there, the market's going to build a pattern. That's what I think is going to happen in this market. A lot of what we talk about, we put out charts on. It could be in currencies, the metal markets, 1 or 2 charts a day. It's a free service if you'd like to try it and see what our chart of the day looks like. Think of it this way. A market starts making a move. Where might it go? This is not the trigger. This is after the fact. You get this by giving us a call. You can go to our website and sign up for it. You can come right up here. If you see us on YouTube, there'll be an icon or underneath us that says, click here for Ira's free information. I'm Ira Epstein. You have a good day.